Hello, traders. Welcome to another daily analysis and recap for March 15th, Wednesday. We are right now at 2:30, 2:23 a.m. Now about half hour into London Opens. So let's get into it. Wednesday today was a quite busy day, as I mentioned, from the Wednesday New York time afternoon all the way until tomorrow. Thursday, we will be having a 48 hours of economic data days. So today, let me just pull out the calendars because I didn't really write a report. It's getting quite busy nowadays. So let me just do an audio basically explanation to you. So today, of course, the biggest event. London session was quiet until morning of New York. We have the employment data from UK, and it was on the hindsight a mixed picture because you have a lower unemployment rate, a lower climate account change, which is very positive, but you have also a lower average earnings. So it's very similar picture to what happened in non-farm payroll, which is that number-wise it's better, but wages-wise it's not. So if you guys remember, last week was non-farm payroll, and it's exactly same thing. Non-farm employment change was better than expected. Unemployment rate was better than expected. However, the average earning was lower than expected, means that the wages are still low. And right now, basically, all the central banks are really paying attention to the wage inflation because that's really what's going to lift up the inflation. No matter how much jobs you have or you add on, if the salary is low, then the consumption is not gonna pick up, and that's not gonna be good for the economy and inflation. So that's why, even though it's a mixed report, it was market treated as a negative report for British pound. So we saw a weakening in the British pound through the London session. Until the New York session, we also have CPI, core CPI, retail and core retail. And as I mentioned, usually these are important data to trade, but because of the FOMC meeting in the afternoon, we didn't really have much movement, and that was the case. So all these are important data, but didn't really have too much movement. If you are intraday trader, then yes, you could scalp 20-30 pips or so. Real mover shaker comes in the FOMC meeting, and the result, many of you know, is as expected. The fund rate had raised 0.25%. Now, the interesting thing about this thing is, again, I think it's really depend on what kind of trader you are. So a lot of dollar weakness because of the events, and that's really just like, as I mentioned, buying the rumors, saying the fact. But does that mean we should jump in, go ahead and sell US dollar? It's again really depend on your time frame. Now, for me personally, I have two separate accounts for different trading. Basically, one for swing, mid-term, long-term, one for intraday trade. So intraday trade is always more focused on the sentiment, and that's why perfectly no problem to sell US dollar today upon the release if you think it's kind of dovish. But for swing trade, that's where you should really trade with the fundamental only. Now that means sometimes you will get stop out at break even at best. Sometimes you will get stop out just as it is, and I cannot tell you which way is correct. It's really depend on your own trading strategy. But for swing trade, you have to think about that's a trade you only maybe enter once in the market at a set time. You're really just looking at the fundamental and the technical levels, and you just let the price action plays out, because that's the presumption is that you don't really have time to sit in front of your screen. So that's why you want to have a different kind of method for swing trade. So basically the fund raise is good for US dollar tightening. However, because the market had expected already, and it has, again, market always tend to get ahead of itself. It does expect a much hawkish statement, and that we did not get that, so it become a quite dovish incident, a quite dovish event. Now, I wouldn't really say it's a dovish thing. It's just, for me, it's just less hawkish. So for me, it's a big difference between dovish and less hawkish. So less hawkish just means that they are not fulfilling the market expectation. Now, dovish means that they're really talking about rate cut. They're really talking about possibility of easing. Now, what happens, in the last New Zealand RBNZ meeting, market was also expecting a very hawkish statement, and then after that, we saw New Zealand dollar dropped significantly. Now, that's not because it's a less hawkish statement. It was a very dovish statement, because basically the governor came out saying that not only they are not going to raise the interest rate at all in 2017, and they are still, basically they paint a very negative economic picture, basically. So that's the main difference between, I think, this, if you looking in more detail, there is not only dovish and hawkish, there will be less dovish and less hawkish. So today, I think FOMC is not really dovish, because they didn't come out and say that, oh, we're gonna start a QE again, or like we're gonna cut interest rate. All they say is what they had said previously, that they are going to raise 3 times. The economy is still uncertain, and inflation had picked up, but still quite not reached the target, especially for core inflation. Now, that's all something, the same thing that had been said before. Not something a surprise. So why do we see a big drop? Because market had pricing, or basically get ahead of itself, as it usually does. So that's why a lot of deep buyer will come in to buy US dollar, especially for a swing trade perspective. So I will get into my chart later on. And that's what happened. The press conference was another drive for the US dollar to a downside, and that's how the market anticipated. Then at the New York session afternoon, again, we have the GDP data from New Zealand. This was quite negative. So for New Zealand, previously, before the last RBNZ meeting, it had a quite nice bullish run, and that was really based on a positive GDP, positive inflation. So right now, this inflation is really a miss. That's really, and on top of that, New Zealand dollar had already had a negative trend, had already had acquired a bearish sentiment, basically. So this just pressure it even further to the downside. Then we have the employment data from Australian dollar. Now, notably that Australian dollar was the biggest winner today after the FOMC meeting, because as I mentioned, whenever you have a dollar weakness, you tend to have a strong buying into Australian dollar. I'm sorry, actually it's not Australian dollar, it should be Canadian dollar. So the commodity currency had a very nice run today because of the dollar weakness. Employment change was negative for Aussie, and I actually sold it right at the beginning. But then looking into the detail, you realize that the employment change actually it had increased for the full-time employment and decreased for the part-time. Now, that's really the devils are in the detail for this employment data, because full-time is always more significant than part-time. So I jump in, get about 10-15 pips, jump out right away after I realized it's actually not that negative. So originally it was a negative deviation for me to sell. Then I realized, looking at the detail, it's actually not, I wouldn't say it's positive at all. No, it's still negative, but it's less negative. So I jump out, and actually for me, will think it's not a bad, basically this was a roadblock for people who wants to buy Aussie today. So after FOMC, a lot of people wants to buy Aussie, but Aussie dollar did not have as much movement as dollar CAD, and the reason is because a lot of people are worried about this employment data going to sink Aussie, and that looks like what had happened at the beginning, but looking at the detail is not that negative. Still, the labor market is very soft for Australia, so that is going to be an issue for Reserve Bank of Australia to deal with it. but it's not necessarily a big drop. It's not a big blow, basically. Then you have Bank of Japan policy rate, which came out as expected. This is a non-event, basically. So what's really happening later is the press conference. I don't think it's happening yet. So it's coming up very, very, very soon. We will have the press conference, which might be the real mover. The presumption is that it might be better, more hawkish, because they did have a better inflation from the previous data, but it's still way below the target. So we don't know whether it's really gonna be an event or not. There you have the LIBOR rate for SMB. And this is not really a big event, to be honest. Most likely it's going to be the same. And then the Bank of England, this will be an event to trade, not the official rate, because it's again expected to be on hold. So the policy summary will give us a better hint to see whether BOE is more hawkish or dovish. And that's actually pretty much it for this week. So right after BOE, I will say this is the end of the real main events for the week, because Friday you don't have much going on. And that's pretty much it. Dutch election had finished today, and the candidate, the non-pro-nationalist candidate, I don't really know the party name, to be honest. Sorry about it. But basically, it's a good sign for Euro, good sign for Eurozone. However, it's not the end, because as I mentioned, the parliament, any party is not big enough to control the whole parliament. So they have to have the cooperation government, basically. So still more to come, but that, of course, give Euro a little bit bullish sentiment. So we did see a lot of strength into Euro dollar today because of these two events. Okay, so let's get into what happened today. So basically, Pound was the one I didn't really trade. Let me see if I trade anything at all. I'm just looking at my notes here. March 15. I was going to trade British Pound upon the employment data, but it was a mix, so I didn't do anything. And like I say, we had a little bit drop, about 50 pips or so from the top to the low, and then it's a range market all the way until this green candle, which is a FOMC meeting. We saw continuation of dollar weakness in all the pairs. So what happened is I actually had a few pending order to short upon the meeting. So for me, it's just really I did expect a dollar weakness for today because of the buying rumor selling effect, and that's one scenario. The other scenario is that if FOMC had not raised the interest rate, of course it's gonna be even more negative for US dollar. So either way, it's more possibility to the downside. Now, my penny order got filled at some critical level. Now I choose to short cable for a very few big reasons. One is that the Brexit is happening. The triggering Article 50 is going to happen next week. So that's going to give Pound another shaker, most likely a downside pressure. Another thing is that Bank of England, I do expect to be more dovish tomorrow. Even if they want to raise interest rate, it will be a more dovish way to raise it, because everybody know that the reason they want to raise interest rate is because the inflation from the depreciation of currency. So it's not really a good sign for the economy. If they raise interest rate, it's completely different picture than US. The US raise interest rate because they have a good job market, they have a good production, manufacturing, they have a good inflation based on the economic activity. The UK, if they have to raise interest rate, it's because their currency dropped significantly. So that's why it's not really a solid economic picture. Now, based on these two downside risks, I'm really still kind of bearish into cable. And that's why I put few pending order. And my biggest, really just betting that 23 handle will hold. And that was the case, actually. I almost got stop out because my stop is just 23.10. So you see, I'm like I'm at like less than 1 pips actually to get stop out. I might still get stop out later on, which don't really care, because then if that's the case, I don't want to go against the dollar weakness. The thing is that you don't know how far this sentiment is gonna go. For me, that's for intraday trade, very important is you have to follow the sentiment. You don't want to go against it. For a swing trade, that you can't ignore it, providing if you have a large enough stop loss, which I will explain later for my swing trade setup. So for intraday trade, I got in, I have few pending order. Overall, my entry was at 22.45. So right slightly below 50 handle. Right now I'm in 30 pips, 35 pips drawdown. I'm still betting that 23 will hold. If not, like I said, that I'm gonna get stop out. It is just the way it is. So that's the trade I'm in right now. I also got in OC Cat trade, and this this was unfortunately because I got in right at the bottom here. And I got out without any movement, small loss, about 3 pips or so, break even, only to see it shoots up. Now, the reason I got in is because, another news from the oil market saying that the demand had not picked up, and then again, it just basically don't really have positive news from oil. So for me, I think OC Cat should keep going up. And the good thing about OC Cat is you basically hedge out the risk sentiment, because they both are commodity currencies. So listen, again, I am too impatient for myself, because if I had hold it, I would profit nicely for this trade, but I simply was too impatient. So my analysis was correct, my management as usual sucks. So that's why I need to learn for myself. So OCCAT got basically the non-trade for me. Then right after the FOMC, originally, as I mentioned, my cable got filled. I was really kind of worried to get stop out, but like I said, if I got stop out, that's the way it is. This kind of trade, I wouldn't recommend, especially if it's from FOMC, because the thing is that if you trade against the sentiment, it can work in a swing trade perspective, meaning that you will have to give it more days to play out. And a lot of time you will catch in a falling knife. So that's why I wouldn't recommend, especially if that sentiment is coming from a central bank. So normally, if it's coming from a central bank, it should be large enough for a next few sessions. In this case, because of the Bank of England meeting today and the Brexit, these two risk events, I think should pressure British pound to the downside, and that's why I'm more confident to choose cable. So I didn't choose any other dollar pair to short. So that's the only reason. Now I might be wrong, so this is not really a high conviction trade. That's why I had few pending order. That's why I had a tight stop loss, things like that. After the FOMC, I basically took off and then came back to my desk to realize, just to saw the catching the Australian employment data. I actually forget about the New Zealand GDP, to be honest with you. Just too much events going on this today. I had kind of too tired basically. So I actually missed New Zealand trade, and that one I remember was at 445 if I remember correctly. Just give me 1 second. So the GDP data was at 545. Okay, so usually I wouldn't trade it prior to the daylight saving, because 445, 5 o'clock is my brokerage shutdown for 15 minutes. So I usually don't trade, but because the daylight saving now we're pushing an hour ahead, this was actually tradable, but I didn't trade it. It was a pity I missed it. I got back around 8 o'clock to realize that, and then I quickly take a look at New Zealand dollar, and I basically took a trade short in New Zealand dollar at 0.725. So this was my entry, 0.725, and the reason is because I think this new catalyst for New Zealand GDP is very negative for New Zealand dollar. On the other hand, US dollars is quite still resilient fundamentally speaking. So for me, just want to take this chance, short it at 25. My stop loss was 60, so about 35 pips only. And unfortunately, I actually reached this low, and I was not around my desk because I don't think we're gonna have this movement. Anyway, right now it shoots up again. I'm already at break even, so I don't really care if I get stop out. I might re-enter, I might not. Again, I am going against the dollar sentiment right now, so I don't want to risk too much. It's just just a try out. If it doesn't work, it doesn't work. So hoping to see it breaks down 0.7, which it had breakdown. We want to see if we can close below it more and more, and perhaps reaching to 69.50, but might not be the case. We might get stop out before that. Another trade I took is Euro Aussie. As I mentioned, I was short the Aussie upon the negative employment data. Realized I was wrong, so got out with 15 pips right away. So I pretty much bought at here, this 8:30 green candle, got out right away. So just bought at low 40, got out at 55. And then I also in at Aussie dollar right now. So this one I'm long. So I'm long Aussie because of the dollar weakness. So you can tell I have few different hedging trade. I'm short cable, means I'm buying US dollar, but I'm long Aussie means I'm selling US dollar. So for me, it's for Australian dollar, right after the employment data, I think right now it does clear the roadblock for it to keep going up. So if the market decide to keep selling US dollar, I can ride on a nice trend, and I think Aussie dollar will be a strong pair to go up. On the other hand, if market decide to not sell US dollar, then the cable will work, and Aussie will have a bit drawdown, but still could be quite resilient, because I still think Australian dollar is very strong right now. So basically, that's the concept why I took this trade. My last intraday trade was Aussie New Zealand. I took at 1.0937. So upon this low here. Now, the reason is because of the basically the employment data. As I mentioned, I quickly checked to realize it's not that negative for Australian dollar. So I decide because of that, and couple hours ago we had a very negative GDP. So on the other hand, central bank speaking, we have a very hawkish RBA versus very dovish RBNZ. Fundamentals data wise, we have a very negative GDP and a very not so negative employment from Aussie, and very negative GDP from New Zealand. So all that, and we are right at this 4-hour support at 0945, 0950. So for me, just jumping, it was a small trade. My stop loss is 0890. So risking about 45 pips, and aiming to take half off at 1.10, which it almost hit it. I took half off already, so this one is at break even already. I'm really looking to ride it even longer. We might have a retracement down here, but I'm hoping this one can keep going. We'll see what happens. So that's pretty much all my intraday trade right now. So I have Aussie dollar, Aussie New Zealand, New Zealand dollar, and cable. And the only thing I'm really worried will pretty much be cable, because again, Bank of England might be dovish, but it might also be hawkish. So that's the one I'm not 100% certain. For New Zealand dollar, I'm very happy to hold until I get stop out, because at break even, of course, because the GDP data is such a huge negative catalyst for New Zealand. And really now it's just up to the market to decide whether they want to resume of buying US dollar, or they want to keep selling it for the next days to come. Eventually it will be both for sure, because US dollar fundamentally is still very strong. But for this Thursday, Friday, this 2 day, that's the end of the week, we might continue to see a dollar weakness. Nobody knows, so it's better not to fight with the sentiment if the market decide to sell US dollar. So that's pretty much my intraday trade. So far, I am fine. Don't really have a big loss today. I have one of two and three winners. Right now, just keep holding it. So that's the intraday trade account. Now let's take a look at my swing trade. So the swing trade, first thing first, it's a very different concept. So swing trade, also, it's kind of hard for me because although I am trading in front of my desk, but whenever I trade swing trade, I always have to pretend that I'm a person who is not available to trade. So basically, I don't open my swing trade account during my trading hours. I treat it as if I cannot access it. So for me, it's just to be persistent, because I think if I start messing around with my swing trade, something I say I'm gonna hold long term, it's really going to jeopardize my strategy. So for swing trade, it's very simple. I only take trade that had a fundamental bias and had a very nice technical level for me to write up. I generally write a trade and hoping to catch a trend of the year, not the month, not weeks, trend of the year. And that's why I don't get out unless the fundamental picture had changed. Otherwise, I will write it until I get stop out. So that's the first thing first. So that's why a lot of time I could have profit, I could have get out. I choose not to do it just to be more consistent in my swing trade perspective. So my loss today, euro dollar, this one I got stop out at 0.725. So I got in, way ahead because of this candle. And this was, looking back, maybe not a really good entry because it was really not at any significant resistance or support. It's basically too low for me to reach another low. So for me, it's, previously I didn't really have a clear approach basically for swing trade. Still trying to figure out, and this was basically too low to get in. Could have moved to at least 0.6 or 0.650. Then I would still be in play. But nevertheless, we were never low enough to move to break even, never reach 1-to-1, and it goes against us and never come back to give us a meaningful exit. So today the FOMC shoots up right away. Now I have another entry getting at 0.7. So I choose 0.7 very simply because this 0.665 to 0.7 is a support, a resistance zone. 0.7 is a good handle, psychological handle. We did have a 100-day moving average here, and for me, my stop loss is at 0.9, so very far away, and we'll see what happened here. If we get stop out, that means this thing shoots up to all this resistant area, including 200-day moving average. So I'll see what happened. And again, a swing trade position for me, it's as simple as it sounds. You go with the fundamental bias, you find out a nice support and resistant area, give yourself a proper stop loss, and then just write the price action. Basically ignore the sentimental movement. It takes a lot of patience. You have to be fine to get stop out at break even, because I don't take profit, as I mentioned, unless the fundamental picture change. Otherwise, I just trailing it. So it really works best if you really have a job. You're not gonna be able to trade anyway. And for me, or if you travel, this is a very ideal strategy. It's a more passive way. So that's the one that I got one stop out, and the other one still in play right now. My other dollar trade also almost got stop out. I have one at 112.80. So I got in here again. This was not an ideal entry. This was a lot of entry to combine to this price. Otherwise, I generally enter at a handle. So it's either 112 or 112.50. But nevertheless, that's what happened. So this one I did reach to 101, so I had moved to break even. That's why I'm not really too worried. The worst case scenario is I get stop out at break even at 112.80, 81. And we unfortunately didn't reach 116, because if we had reached 122, I can move to 121, then I will at least make 1% in this trade, but that was not the case. So it is what it is. You know, a lot of people might say, how come I don't get out at 115 here? The thing is that you never know. I don't like to guess what the central bank is going to do. Again, that's only for my intraday account. For the swing trade account, I really just go with the fact. I don't like to predict the things. I don't like to guess. So today we never know how the central bank is going to be. On top of that, we don't really know how the market is going to be. So a huge drop like this today, it's highly likely, but you just don't know how strong it is going to be. Sometimes you have a huge drop only to shoot up. So really, or maybe you can say I'm not experienced enough, which can certainly be another factor, because I'm quite new actually to trading the fundamental style. So could be another factor that I'm still learning. Perfectly logic. So for me, anyhow, that's just the way it is. I might get stop at break even, upon which time I might looking to enter again at this critical support area. But if you're looking at dollar yen, to be honest, you just really at this range bound from the beginning of this year, basically. So really not a whole lot of clear picture going on. Now dollar Swiss is even worse because we are at drawdown right now. So again, we could not move to break even because we did not even reach to 101. So that's just something I follow strictly. Again, you will have lose like this individual trades, but you have to look at the big picture in a yearly perspective, or in the years to come, that you want to be consistent in your approach. So for me, that's what happened on my dollar trade. Cable, it's not bad. I'm still holding it 25, you know, and again, not low enough for me to set to. I didn't reach 2 to 1 basically. If I had reached 2 to 1, I can set to 1 to 1, but not quite the case. So I'm still at break even only. Let's see how this thing gonna play out. I'm more confident in cable just because we have more risk events to come. The Brexit is going to shake British pound most likely. So again, the worst case in this dollar trade, it's all break even. Aussie trade was beneficial because of the dollar weakness. So I got in at 86, right now at 87, 49.50. That was the high of the day. Stop loss was 84.50, so I need about 150 pips. Sorry, stop loss at 84, so I need about 200 pips before I move to break even, which I hasn't reached yet. Hoping to reach 88, which is a previous high. Then I can move to break even. Aussie Swiss also shoots up today, which was pretty nice. Previously we had a nasty drawdown, and it shoots up today. So 76.50 was my entry, 75.50 I think was my stop loss. So upon this line, I can't move to break even and ride the trend. So again, that's why I say you have to look at a yearly perspective, because it's just, it doesn't really, you know, you gotta zoom out, look at a yearly perspective to realize there's a lot of range bound, and that's where you're gonna get ups and down movement. And the best case scenario is you get breakout, a stop out break even. So that's just the way I trade it for the swing perspective. So basically, that's the swing trade I have right now. So let's take a look at the 28 pairs. So Euro Pound today, you know, a nice resilient kangaroo tail, and Euro is having a quite nice sentiment right now. You have a good positive sentiment from ECB last week. Today, the Dutch election had given Euro a nice push up. On top of that, the dollar weakness also give Euro a nice push up. So Euro Pound, I do expect this thing to continue to go up. It's not something I'm looking to buy just because I don't have enough fundamental bias in terms of swing trade perspective. The only currency I'm looking to buy in a daily trade perspective is US dollar and Australian dollar. Euro Swiss, basically non-movement for the day. Euro dollar shoots up with this green candle. We'll see how it plays out. Euro Aussie actually dropped just to show you the strength of Australian dollar. Now I'm still looking. I had a pending order sale at 41.50. Unfortunately, we never reached there. The high we reached is 41, and of course it does drop today to 39. So my order is still in because you could have this kind of a double top movement, and it's really dependent. You could wait for candlestick. Sometimes the downside is that you're gonna miss the trade. The upside is that you're gonna prevent a shoots up. For me, 41.50 is a nice area just because there's a strong weekly support. We also have a 100-day moving average here, and this previous rejection from candlestick, which is all here, it's looking very nice. So I'm still have a pending order here. We'll see what happens if we ever reach there. EuroCAD, not something I'm looking to touch. For Canadian dollar, we did have a nice recovery today, but just be careful because the oil market is still quite volatile, and right now everything's up in the air again between the crude oil shale producers versus the OPEC members. Euro New Zealand also still quite resilient above 1.53, so that's still looking to the upside. So just show you how weak New Zealand dollar is. Euro yen, not much movement. Doji for the day. Now cable, look at cable, has shoots up because of dollar weakness. Pound Aussie actually continue to reach lower, so we are at a critical low at 59. 59 area is 59.50. 59 is really a low, basically historical low. Aside from the crash trade previously last year, this 59 should be a strong support. So we'll see. If it breaks down, it's significant. It breaks down if it closes below. Pound CAD, we did have a doji here, but really not a currency pair I choose right now. Pound New Zealand also actually went up, and Pound Yen, not much going on here. Swiss franc, Japanese yen, also not much going on. Dollar Swiss, we had gone through that. Dollar CAD actually had a huge drop. So dollar CAD is something I'm looking to buy actually in terms of the intraday perspective. So we'll see how it plays out. We, just looking at it, you have quite a few support downward. So it's very hard for the roll down south. So that means, and of course, we don't want to trade just technically. So for the fundamentally speaking, US dollar is still very stronger than Canadian dollar. And the oil market is still volatile. It's still, for Canada, the NAFTA deal is still up in the air. So all these things are a negative sentiment for Canada and fundamental bias for US dollar. So we are looking to buy dollar CAD, and originally, we're hoping for this kind of, drop. So now we are right at this kind of support area. So we'll see how the candlestick play out tomorrow. If we have any sort of rejection at 33, 32.50, or even 32, these are nice zone to buy dollar CAD. Dollar yen, as I mentioned, keep dropping lower. We might actually hit 112.50. So we will see what happened, whether 112.50 is. I'm not gonna jump in and buy it, as I mentioned, because the sentiment is still very negative for US dollar. So I don't know how large or how long this thing's gonna go. Especially April and March and May, you have a lot of political events that's going to shake the global market, which going to inject a lot of safe haven inflow for Japanese yen. So you have to be careful because of that. Now Aussie, talk about this already. Aussie dollar, Aussie CAD. Aussie CAD is looking nice too. We are just break above 0.2 already. So, again, what a pity. Should have called my trade, but it is what it is. Aussie Newsy, I'm still holding this in the intraday trade perspective. And for swing trade, really, I don't have any good entry, to be honest. It's just too far away from all the moving average. I don't like to buy at high in a swing trade perspective. Aussie yen, still holding it. CAD Swiss, not something I'm looking to do anything about. Same as CAD yen. You see, we're still right above this 85 area. UT Swiss, UT dollar. Had a short trade here, intraday speaking. Now ignore the gap. This is just my brokerage. I think it does have a different closing for Newsy pair, so ignore it. Newsy CAD keep dropping, and Newsy yen. So pretty much again, only thing, if you're flat, then definitely I think all the dollar pair is at a quite attractive level to get in, but be careful. If you want to be more conservative, you can't wait for next week. And dollar yen, it's looking to touch 112.50 or even 112 handle. So if that's the case, might not be bad to getting again at 112. So that's pretty much it for my swing trade perspective. So right now, today I am just going to trade again for, not going to trade SMB. So Bank of England, this will be my events to trade for the day. CPI, I'm not looking to trade it, just Bank of England, not trading the bank rate, but the monetary policy will be a good one to sense where its direction is going. And that's pretty much it, to be honest with you. Then I'm going to wrap up for the intraday trade perspective, unless we have anything happening. Otherwise, data-wise, don't have anything important anymore. So we will see how the market, again, if you don't have enough fundamental data, then it most likely will go with the sentiment. So, watch out for the news to come. Okay, so guys, that's pretty much it. Again, if you follow my trade, do your own analysis. And I think entry is always the easy one, but how to exit is completely depend on you, individually speaking. So I think you can try out different methods to see which one fits you better psychologically, and then that will be the one you choose to follow. Okay, let me know if you have any question. Otherwise, I'll be back tomorrow with another daily analysis. Thanks for watching. Bye bye.